Okay, good morning, traders, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Thursday, May 26th, and welcome to the last webinar of the week and month. Interesting setups. Some dollar crosses have been absolutely lackluster, just holding on to dear life on those ranges. Some of them with some interesting moves. So we got that dollar CAD pullback. Sterling kind of taking back the breakdown, coming right back towards the weekly highs. You got dollar yen. Let me go through the list, guys. DXY, Euro, Kiwi, dollar CAD, gold, SPX, Aussie, crude, sterling, and dollar yen. We'll take a quick look at Bitcoin too before we close out the session. Tomorrow's main event risk obviously will be the Fed's preferred inflationary read through the PCE, the personal consumption expenditure. We just got the release right now, guys, a couple of minutes ago, of durable goods coming in way weaker than expected on the month-on-month, quarter-on-quarter, right in line, 6.4, we're expecting 6.5. So don't expect to see too much of a jump off that, but tomorrow is going to be the heavy hitter. PCE is expected to come in at 2.9% year on year. That's up from a read of 1.8. We're also going to be looking at the Michigan sentiment. That's going to be the final read for May. We're not going to really pay too much attention to that, but it's also supposed to come in a little bit weaker than expected. So interesting event risk into the close of the week, into the close of the month, ahead of an extended holiday break here in the United States. So definitely a good time to be a little bit more reserved, lighten the load, be a little bit more meticulous with your entries. I typically like being essentially flat on anything major heading into the close of the month, especially when there's a holiday weekend there. But the levels are very clean. All right, we got a lot of weekly opening ranges that are still intact, but really being pressed here. First things first, DXY. If you're not sick of this chart, good, because you're still going to see it every webinar. I just want to highlight a simple level, guys. The objective yearly open. We tested it back here in February, tested it last week, spent most of the week below it this week. Haven't seen a weekly close below. And while all the while everyone's super bearish, dollar, oh no, this is, whatever selective thing they want to pick out from the fundies, you're at support. Haven't been able to break support yet. And it's critical that we get a weekly close below that for the resumptive move in the dollar. What's that mean? Well, it's been the same exact setup, guys, for the last 2 weeks. You're looking for the downside exhaustion, into this level. We need a weekly close below to challenge the yearly lows, the 2018 low week reversal close. But until we do, that's support still. So that's from 1,000 feet up. Pay attention to this one tomorrow. If you get the close below 89.90 for the weekly, settle, and for the monthly close, I might add, then you're looking for, a slam into the 89 handle. Here's what it looks like on the daily chart. No surprise to be seeing some kickback today. Why? Well, downslope resistance. 1 touch, 2 touch, 3 touch, 4 touch. There it is. Okay, very simple. We've been straddling the objective yearly open. Got a couple of daily closes below it, but nothing concrete. Been straddling this thing all week. The drop that we saw this week literally found the low at the low day close for the year. That's 89.53. Building divergence as price action makes new lows. Something's brewing. All right, something's a brewing. And if it cracks, like I said, this should be an accelerated drops. If it does, again, I'm looking for the possibility for a larger breakout here. Morning, Iman, how are you? Hope all is okay on your part. Great to see you, Iman. I'm ready for the weekend, ready for the close of the month. So I hope you guys have some fun stuff planned for the extended break, but there are a lot of setups to consider as we head into the close of the month. Here's what it looks like on DXY right now, and here's what it looked like last night. Look, I conceded last night. I don't know if this pitchfork is in play. It looks spectacular now a day later, but the level that noted it, or the level that kind of highlighted the region of resistance, was 90.15. Friday is high. The median line for the current operable slope, we don't know if this is in play yet, but this would have been the first inflection point you'd look for. That downslope we looked at on the daily chart, and the median line for the current upslope. Here's the reaction you got. Here's support right back at the yearly open. Bullish invalidation back at the February low, a break higher from here. You're looking 90.42. That's the April low. You're looking for the 618. That's 90.82. So for me, this is just wrapped up in a bow, guys. A nice weekly opening range, essentially. Technically, that's the weekly opening range high, but again, resistance is resistance. Slope is right there. If it does get any kickback tomorrow, a good area to look for some support would be on that slope. And if you give this thing a run, of a retracement just of the near-term rally, the 618 comes in right at that, just below 90.80, 89.80 rather. So you can envision a scenario tomorrow where if you do wash out, you'd look for exhaustion there. Bottom line, if this upslope is in play, we're looking for like 90.40, 90.80. The Fed's only a couple of weeks away. You've gotten a litter of Fed speakers over the last couple of days who come out, oh, well, you know, actually, we might have to reconsider. We might need to start talking about, thinking about, and these ridiculous comments that come out. It's for me, it's just sheer comedy, but it's great to spur up a little bit more volatility. So at the end of the day, if we do get some jackknife action tomorrow, remember the expectation is 2.9% clip on that PCE read for core, right? So that's stripping out inflation and or food rather and energy. That's where you'd want to see failure. Topside breach levels are pretty clean. Questions on DXY? No change to the levels from yesterday. Just want to add that quick retrace if we do get the kickback, but looks pretty clean. See if that slope can hold. I see your list there, Marcin. Yeah, I'll try to hit those. Okay, number 2, euro dollar. Here is euro. Nice little bounce here. Sorry, all my pairs got rearranged. It's going to take a little longer to find anything here. Okay, here's euro dollar in the weekly. Level and focus, it's the same thing. Okay, the yearly open is here. I don't have it denoted on this chart on the weekly, but the 786 of the yearly range, the high week reversal close, that was the January high week close, still haven't gotten a close above on a weekly close basis. Watch that. If you're looking at anything this week for the euro, that's the level, right? Just as it is for DXY, the yearly open. Here's what it looks like on euro. Just going to type it in. On the daily charts. Okay, there's your yearly open, 2239. 2261 was an exact 618 extension of the advance. Boom, 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 boom. You had the highs from February, yearly open. Nice divergence into the highs. Reversal candle yesterday. First area of support, 121.68. Gotta break below that for this to be on more of a reversal pattern. As it stands right now, all of these trades are just a pull into resistance and a pullback. We can't assume reversal until we see a break of uptrend support. We haven't gotten that just yet. I took the opportunity to short at the 618. 610, 618. I got you. Amen. At 2260, well done. Well done. I give you props. That was a really, really nice level. I loved it. I've been talking about that trade since the start of the week. It's been a jam-packed week for me, guys. I've been on 4 live events, including today. So we've been really having our hand on the pulse of this, and I loved the reversal. You're absolutely right. Well done. So here's what I'm saying. Here's what I would tell you on that trade. I don't know if you're still in it, Eman, but it looked phenomenal on the intraday approach. Here's what it looks like, or here's what it looked like yesterday, but even before, here's what the 24th, right? Here's what it looked like at the start of the week. This was the critical zone of resistance. Last week we probed it, but the range held. This week we pushed into the top of it and then broke, right? Look at this. Fast forward to last night, We had already started to make the turn. Key region is support 2159, 2168. That's still the level to beat. Okay, I've adjusted this slope, guys, just a hair from the actual high to that secondary high. It seems to match the gradient a little better, this versus this. You can see a little bit more of a touch, inflection, break, resistance, resistance. So it just throws it off, it slightly adjusts the gradient off a bit, but it looks pretty good. 2168 is the top end of the zone, 2158 is the bottom end of the zone. Below that, it's an objective range break. Below that would be a break of uptrend support. Below that would put that slope really into function, into play. Now, the initial level, I'd have to, if this does break, maybe we get a top high, low, high, we can take an extension off of. But at the end of the day, if this does break, the first major level of support doesn't come in until, the 21 handle is going to be a big figure play, as it always is. You can see some inflection there back on the left. But it's really going to be a 38.2, a basic 38.2 of the rally gives you 250, 2050 rather. So this is big for me. This is big for me. That's the big zone of inflection as far as support for euro. Key resistance still 22.40. That's the objective yearly open. Any questions on this? It's just super interesting levels to be heading into inflation data tomorrow, especially with inflation being the talk of it. I mean, once you see inflation start going into like the major news outlets, guys, not even financial oriented, that's when you want to be a little bit more sensitive to it. And the PCE again is the preferred inflationary gauge there. Don't forget, as we head right into the open of next week, we do have some event risk there too. We have Australian, the RBA rather from Australia on June 1st. We have Eurozone inflation. Then we get GDP data out of Canada. We get PMI numbers out of the US. It is loaded right into the open of June. So with all these ranges, watch out into the close of the month with those washouts tomorrow, especially if we get a surge in that data. And then, and I think things will be set for a really nice June. And typically you talk about like summer months, man, the summer gets lulled and all this nonsense, but I don't think that's going to be necessarily the case per se this year. Of course, what do I know? That's just my opinion. Let's see how this pans out. In any event, that's euro dollar. Next up on tap from last night, number 3 was Kiwi. So New Zealand dollar is in an interesting juncture after the RBNZ, basically saying, well, second half of 2022, you might see a move on rates. That's all good and dandy. You saw this thing essentially hold uptrend support, and we're right back at resistance. Now, near term, there is a little breakout that happened. I'll show you on the intraday chart. But from a weekly chart, it puts us right back at resistance. It puts us right back at resistance. 72.92 is the high close of the year. 72.65 is the 618 retracement of the yearly range. We're there again. So, on a near-term approach, absolutely, I'm with you. It was a breakout. That breakout, right back at resistance now. I do think there is an interesting divergence that you're seeing with some of the commodity currencies, I guess. So Kiwi might be doing its own thing here, but we need a weekly close above 73, let's call it 72.92, to validate a larger breakout. Till it does, I don't really know what to do here. Marchin says it's a beast. Yeah, it's a beast. It's the strongest performer versus the dollar this week. In fact, as of yesterday, it was the only currency to be stronger. Now, obviously, you're seeing a little kickback today on dollar crosses, generally speaking, but Kiwi still holding that resistance. So on a weekly chart, guys, keep your eye on that. On the daily chart, it gets even messier. Okay. So there's the high day close from January. There's the high from April. The high day close prior to yesterday was there as well. And it continues to highlight 72.65, 72.87 is 20 pip zone of resistance. So what do you want to do with that? Not to mention that high, if we close right now, constitutes a third divergence point. Higher high in price, higher high in price, higher high in price, lower high, lower high. So I'm very speculative of this. I'll take it back one more step. If this is the objective monthly opening range, well, then a break here should really see an accelerated pop. I don't want to see this meander. I don't want to see these high tails. I need to see an accelerated move here. So I'm going to leave that there, guys. I really don't know how to let me say this, if you're holding along, anything a buckle below 72.50s or 72.60s, I probably just want to bail on it. Here's the near-term breakout I was talking about. And here's what Kiwi looked like last night, right? We haven't really done jack. The previous update looked like this as we were consolidating. There was a 618 at the drop right there. And we were like, all right, well, look, if it breaks 72.40, it's a breakout, right? Look for a rally into resistance. What happened? Well, the consolidation did break 72.40. You broke into that key resistance level above it, and now it's holding support. But what is this? When you take into account what it looks like on the daily chart, what it looks like on the weekly chart, I'm not excited about being long here per se. Again, I could be completely wrong, but that's where I'm at with Kiwi. If this break is legit, we need to see an accelerated push here. 73.50 into 73.70 is going to be your next major play. That's the high day close for the year and the 786 of this near-term decline in the yearly range. So the levels are clean. I just think momentum is starting to look pitiful here after that. This is the RBNZ. So is that shift in the tone of policy enough to give this thing maybe one last drive to clear out the bears before you turn over? Lackluster. I still think you can get a push higher, but at the end of the day, I'm not probing this one. Looking for an exhaustion. Questions on Kiwi? It could also be a bear flag just in play right here. Series of higher lows, higher highs, in which case, again, you can kind of envision a scenario where you stretch towards the upper parallel before it turns over. But I want to see the weekly close. I want to see a weekly close. All right. So that's New Zealand dollar. All right. It's number 3. Number 4 is dollar CAD. So talk of the town. Are you guys bored of this one, or are you starting to get excited? 2048, 2061. Major level of support, 50% retrace lows from 2017. Last 3 weeks, we've been grinding into this region, even though momentum is deep into oversold territory. The weekly chart speaks for itself. Again, we're looking for a weekly close below 2048 to validate the next leg lower. All things held constant, the bears are at risk while above 2048, 2060, as they have been for the last 3 weeks. That's the weekly chart. Daily chart looks like this. Now, 2 days ago, we posted a reversal candle right back into that same exact level, 2060. 2017 low actually comes in at 2061 right here. And downtrend support. So if we take a look at the slope in magenta here, this gradient is the same as this gradient. It's a parallel. Here's the other parallel off the December lows. Support, 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 divergence, divergence, divergence. Here's the turn higher. So you're looking for a break of downtrend resistance before you make any assumptions of a reversal. That doesn't take us until 22. Okay, this is from the daily chart. Real crunch here. Intraday, today's the tell. Here's what we've been looking at. And here's our last update on Dollar CAD. There was the crunch, 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 breach, failure right ahead of Friday's high, or this was Thursday high of last week. And here's the pullback. Your weekly opening range high is right here. This is where the weekly opening range manifested and tested twice. That's 2085. That's former slope resistance turned support. That's got to hold right there. Now, if you want to give this thing a little bit more of a willing, like, okay, maybe there's a little bit more room. You got 2070. I mean, you can get as meticulous as you want, right? Is the 618 of the weekly range, maybe a drive into that. But the point being, the low has to catch here. The pullback has to catch here if this breakout is legit. 122 is resistance. A break below the weekly opening range low, sayonara. I've told you this from the start. Anything beyond that, if we finally get a weekly and a daily close below that region, you're basically looking for 119.19. That's the 2015 May low. So another one where the levels are clean. The Momo even looks like there's a change in the momentum profile. We talk about this all the time. You know, holding 16 was resistance on downtrends, holding 40 is support in uptrends. You want to see probes into overbought conditions. The first test of overbought that we've gotten essentially since April. So let's see if the low catches here. We get any type of support for dollar CAD. If we are going to see this thing, at least give us a little bit of a pullback, a relief rally in the dollar. Questions might be a nice contender for tomorrow. Number 5 is gold. The gold breakout made another leg or a push extension higher this week, but still look like it's fizzling out into uptrend resistance. Okay. Gold on the weekly. Just wanted to highlight this. As I've been saying for a while, you know, gold is one of those trades, one of those assets that if you've been trading just off weekly charts and you're a longer term guy, you've probably been killing it. It's just been textbook, directional, and clear. The breakout above 1800, essentially it was 1795, but the breakout kind of cleared the way for a larger rally. Initial targets was the 2021 high week close, 118.50. We made short order there. Here's the next major level of resistance. It's the high close for the previous record back in 2011. It's the 618, the entire drop from the 2020 highs. You got former slope resistance. You got the median line for the current operative pitchfork. We're at resistance in gold. Now we need a pivot close above 1923 to validate the next leg higher, or to fuel, right, to inflect that price higher, in which case you'd be looking for 1959, excuse me, and then beyond. But as it stands right now, on the back of a 4-week advance, you're at resistance, right? Watch the weekly close. Gold on the daily chart. Again, same slope, median line tag and pullback like a charm yesterday. This gradient, these little slopes you see in red here, all based off this low, 3, 4, 5-point touch or 4-point touch right there. We were working with this gradient for a while. You saw that topside breach extend higher, a parallel extended off that late high from March, got 2 touches. That was the third. Omit this, clean this, and here we are. Now, my problem with this is that the momentum profile is in deep overbought condition on the daily charts. I wouldn't want to necessarily promote like a really heavy short on this, but I do want to keep an eye out for those topside exhaustive stretch. If we do get a snapback in the dollar, if you do get a little bit of a relief rally there, could limit the top side, give us some downside here. So the focus, again, keep this in mind, still deep into overbought, right? Do not want to get cute, call a high on this. But if you take a look at the near-term charts, again, the slopes continue to hold pretty well. I'd be more comfortable getting an aggressive tag or trying to fade a stretch if it was at one of our levels, meaning if we were converged on the upper parallel here, I would have tried to tag that, maybe fade that one, or here. But right here, you know what I mean? We could make one more stretch late in, tomorrow or early next week to get the final extension of the 2011 high, the high day close, and then break down. There's nothing here that necessarily screams reversal yet. But if you are holding longs, you know, you want to start cleaning things up. You want to start keeping in mind where you're at. You want to start looking for some of those exhaustive stretch, shaving off the longs, bringing up your stops, and getting a little bit more protective as we close out the month. Any questions here on gold? An interesting tidbit here on gold too. I mean, if we get real granular with it, we jump into a 30-minute chart, let's say. This looks like a break of the objective weekly opening range, right? Here's your weekly open. You set a high, set a low, you test the high, try to break the low, failure, try to break the high, failure. You've now got a concerted high, low, high, break. You're looking for that late week high. And that's why for me, a Wednesday high doesn't really satisfy the opening range. I would look for a Thursday, Friday high. Again, this is just like on whole, more often than not, that's where you would want to see the high. So I wouldn't be surprised if this makes one more stretch, if it makes one more pull. Doesn't have to break the highs per se, but again, we've got a really nice level at confluence resistance just higher. That's where I'd be more interested to look for a possible exhaustive scenario. So does that make sense, guys, on gold? I love the levels and I love how it's playing out. I just don't think we want to jump the gun here just yet till we get a little bit more clarity on a failure stretch into resistance. Okay, SPX number 6. Here is Spoos. I love your setup. Cheersy, man. It's the market's levels. I'm just helping you find them. So here's what gold looks, here's what the SPX looks like as we continue to bobble here. So look, I literally don't have anything to update since our last move here. So here's what it looked like back on the 25th. I'll show you the comparison 20-minute chart, but here's one 20-minute chart. Here's the daily. Remember how all of this started? We started with a quick study on the last few times we've seen outside reversal patterns, specifically in the SPX, and just specifically over the last 12 months. You can see they were all pretty fruitful, save this one, which I didn't even highlight because it was December, it was just a holiday trade right before Christmas, and the stretch failed, and we kind of just held that same zone. But every outside reversal has kind of been pretty big. So we got one, shifted our focus lower. That drop failed just ahead of a basic 38.2. Reversed higher. Here's the monthly open, which broke. But the thing that's kind of had me held up is 42.09. This is 2 equal legs off the low. So if this is corrective and we're still in one larger correction off of the major trend off the high, that's the choke point you'd expect to see. For the last 4 days, that has been resistance. So bottom line, the only thing I've been looking for the last 4 days and haven't gotten it is a break of 41.83, 42.09, this little range right here. And that's exactly what has held price literally for 4 days, or this is the 4th day. So what does that mean? Well, here's the intraday chart, and here's the same slope that I showed you guys back on the 25th. Turning right ahead of slope resistance, we had this nice confluence zone here. We talked about 42.09 to 42.19. That was where the slope was. Kind of happened a little late, but it did charge a little bit of a pullback into support. High day close, 41.83. That's still support. And here's the crunch. The record high converges on the upslope at 42.45. That's the breakout zone. That's the breakout zone. So even if this buckles, look for a reaction there. You're constructive above the median line, bullish invalidation at the low day close for the month. That's 41.17. So not much change to those setups for the SPX. It's just don't get faked out until we clear this zone. You could get a little bit more of this, a little more of this. We could even drift into the parallel, then go this. The whole point is that the breach of the median line, failed ahead of the upper parallel. This could be a raised ceiling. We'd need to see a clear breakout of this zone to get this thing going. And you got major data on tap tomorrow. The markets are fixated on inflation, and it's the close of the month before holiday trade. If there's not enough red flags all over the place, guys, use caution and stay nimble here. Okay, previous day we went over Aussie, and Aussie's been at an interesting thing, kind of doing its own thing also, but we haven't gotten a break of this simple weekly opening range. It's been kind of boring, but we'll see if we can't get some play here at some point. I was looking, as I told you guys, a fade off 78 was kind of my dream play. We didn't get into 78, you know, again, maybe I was a little too meticulous on this one, but nonetheless, it turned lower. The levels remain completely unchanged. Key resistance 78 into 78.25. That's just a cluster of yearly opens, pivots, 618s of the drop, longer yearly 618s, slope resist. It's all right there. That's still key resistance. In fact, if you take this to a daily chart, you can see how key of a pivot that's been. Take it to a weekly chart, it's even clearer, right? Big, big, big resistance. So we're looking for a break of this little range here. And we've been looking for this sort of consolidation, which didn't really pan out. Whoop. Right, we were looking at like something like this, like in Kiwi. Didn't really pan out. Got wiggly fingers today. Here's the break, and here's riding as support. So again, this breakout had me looking for a run into like 78, 78.13. Again, we just turned ahead of lower that. So all things held constant, the weekly opening range is intact, just below resistance. You need a push below 77. Again, 77 is an objective level. It's the yearly open, not Mike Boutros' opinion, not Jamie's opinion, fact. So that's the level to beat. That's the level to beat. 76, 67 on the downside, and more critical support right into the 76 handle, but it's all contingent on a hold into 78. That's key resistance. That's key resistance. And that 100 extension, even if this is just a corrective drop, opens up 76. So let's see if Aussie plays out. What bothers me is that this break on the weekly or on the daily chart, remember this is the same slope we've been following. Like, what is that? You know, if it's a break and test of resistance, we got to start picking up the pace here. Dollar's got no hope unless we start to buckle back below that 77 handle. Questions on Aussie dollar? All right, crude prices was the other one that we covered on this report, and that's as we were rebounding off of downtrend support. Look, for crude, I'm broadly still constructive, and I've been telling you guys this on bullish in general. It's just that we're right back at resistance. Remember this one. This is the daily chart, guys. Here's the weekly chart. Just something to put into perspective. Last week, we made an outside weekly reversal off the high. This week, an inside week. Still resistance, 66.26. Daily chart. I'm sorry, what was the other end of that? 66.26 into, yeah, 66.26, right? On the weekly chart. Daily chart pushes it a little higher. You got the 2019 high week close and the 2019 high at 66.57. This is also the objective monthly opening range high, monthly opening range high, monthly opening range high. Made an outside daily reversal, shifted our focus lower, broke the monthly range lows. Then we placed another outside day reversal to the upside. And here we are right back at resistance. If this is going to be a monthly opening range reversal, this break would slingshot higher. 67.94, 70.94, just initial upside targets there. So we're at a pretty big inflection point. Here's what it looks like on the intraday chart. Again, I've reassessed this because we've broken here and we're back in this level here. So a new slope, just kind of taking it off this new high-low, or low-high rather, excuse me, doesn't give us any merit. This means nothing. But what it does is it continues to highlight resistance right here. And if we were to break lower, you know where the support structures are. At the end of the day, the whole focus is on this pivot, right here. And a breach higher would have you again looking for 67.94, 67.70, and beyond. Key resistance in oil. See if that offers anything here on this run. All right, it's number 8. Okay, British pound. So the sterling trade has been the biggest upset for me, I think, because yesterday what looked like a break of a near-term consolidation, like something like this, just fizzled out. Now, I wasn't involved in this, but I was looking for, if this break was just a test of support, I was looking for failure right back here, and it didn't happen. It railed right through. So not sure what we want to do with this at this point. At the end of the day, sterling is now poised as it stands to post an outside daily reversal, right, to the upside. And that's not something I want to necessarily try to fight into the end of the month and where we are now. So I'm kind of sidelining sterling. The interior levels for this pitchfork still look good. So let me just clean this up again and show what I'm looking at. So this broader structure still looks pretty clean. Nothing's changed there. Right, here's what it looked like into the weekly open. This was on Sunday. We noted ongoing divergence into the highs, gave us the risk. Let's look for a pullback to the median line. Well, you didn't get back all the way into 40.80 per se, but we did get a test of the median line. Here's the rebound. Here's the failure uptrend resistance. Looking for inflection here today, right here. Now, this could also be, well, you could be looking at this, well, this is a bear flag, right? Or a bull flag, rather. You pull in back. Once it breaks, you look for the resumptive move. Very well could be. It wouldn't be the cleanest one, but very well could be. It really just determines for me, or puts this one for me in a complete weekly opening range trade for tomorrow, okay? I wouldn't necessarily use that low. I'd be using this low. So 41.09, 42, 10, you're looking at a 100 pip range. That's the weekly range at the highs off uptrend resistance. Obviously, the downside break would be the easier one to play because I don't know if you would get anything for a respectable stop to try to play the breakout higher. And 43 is not that further. But watch this trade. I mean, again, the interior levels, like I said, look really good. Resistance, 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 support. That's the level we got to beat. That's key support and bullish inval. Daily. Keep an eye on this. Watch today's close to see if we actually do verify an outside daily reversal. And on whole, sterling, just for the record, y'all have seen this one. Here's the weekly charts. 43, this whole 70 pip range couldn't be more critical. So yeah, inherently, not gonna really want to be buying, right? If you're long, that's where you want to look to book some. If you're looking for new levels, that might be an inflection zone to short. If it breaks through that, there's a lot of room for the upside. So major inflection zone here for sterling heading into the close of the week and month. Last but not least, the abomination. Here's what dollar yen looks like. That's euro yen actually. Here's dollar yen. As we continue to crunch, I have nothing to say about this one. It stands right now. I'm actually interested to see if we post an outside weekly reversal here, but even if we do, we're still below resistance 109.92, 109.68. Key resistance, major pivot in price. Again, don't take my word for it. Here it is. I need an assertive move below 107.70 to sort of clear the way for a bigger drop. Here's dollar yen on the daily charts. Monthly opening range is preserved right below resistance. Here's your monthly open. And again, intraday, the only thing that we were talking about this week was maybe you get a bull flag here. There's the break. There's a break of the weekly opening range, actually, which does shift the focus higher, 109.26. But into this zone, you have to still be mindful. Look at the high that we executed here. I want to move this marker so you can see it. Look at the high on the first of the month. Failure. Look at the high that we made mid-month. Failure. It all converges right here still. So yeah, it is a near-term breakout, absolutely, but it's a breakout within the larger encompassing range. Look for this one to really react tomorrow, guys. Inflation data, especially US inflation data, tends to be very sensitive for dollar yen. So actually, this is one we will want to pay close attention tomorrow and see how we close out the week. 109.68, 109.92 is still critical resistance. Okay. That's all I've got. That's everything on my end. I also just want to just did want to touch base about Bitcoin. We've gone over this every day this week, guys. The only level I just want to continue to highlight is this critical range as well. Could still get as high as 42,000 in Bitcoin. That would still be at risk within the confines of this broader correction. So keep that in mind. And again, look for a reaction here today. Tomorrow will be something that is actually moving alongside gold as far as the spurs and volatility goes. So we'll keep an eye on this one as well. As you can tell, I'm losing my voice heading towards the end of the week. So I'm going to try to get through all your questions here, Martin, as fast as I can. Dollar Swiss looks like this. Okay, it looks like a hold at that 786 retracement actually at 89.39 that we talked about earlier in the week. Let's see what that looks like into the weekly close here, but so you're challenging a break of the weekly opening range highs right now, right? You're basically at resistance right now, downslope resistance for the broader daily charts as well. If it wasn't CPI, if it wasn't PCE tomorrow, I would be actually tempted to do something on a pullback here if it holds, something like this maybe, for a little bit of a bump higher. But tomorrow is a complete variable, could completely ruin things for the dollar, and it can completely spur on the rebound that we hope for. So that's sort of a gradient I'd be looking at just on whole. And heading into tomorrow's release march, and the weekly open is kind of really what you'd want to see max. I wouldn't want to see any losses surpass that level if we are heading low, higher rather. Does that make sense? Consider something like that. I don't want to call this a break of downtrend resistance per se because the weekly opening range highs are right here. But definitely something to consider. You also wanted to take a look at, so that's dollar Swiss. You also wanted to take a look at pound Kiwi. Man, It looks like a failure at the close highs of the year. That's your close high right there. Pullback. Still in that range. That's null and void. High day close remains intact. It's an interesting setup. Interesting setup, Margin. I'm not sure what you're trying to do per se with this one. My initial inclination would actually still be to look to fade a rally for another drop, something like this. It's too the gradient's too sharp, but that's a low right there. That's the low. So I might be doing something like this for a draw lower, but there's no conviction there. You never really got a monthly opening range break. Maybe if you count this break on the 12th as a monthly opening range break, but that would put the high here on the 20th, and you're kind of basically taking back that whole gain. Watch. It's the 50. So that 100-day moving average will converge right on that 786 retracement, which is right on the median line over the next 2 days. 193, big handle. Daily reversal resistance. Something like that. Key resistance. But that's really your risk zone right here. Right in this zone. And then look to the left, the pivot along that you've seen along that plane as well. So a little bit of a rebound here could manifest itself, Marchin, but I would be hesitant, or I'd be more inclined rather to look to fade that rally well below 196, let's call it. Bigger move, key support, 618 down here. Just a quick shotgun approach. Interesting pair. I'm not sure what's making you look at this one, but very interesting pair. Always go for the ugly guys. Yeah, Marchin, what's up with that? Why are you always going for the ugly? Try not to go with these big competing winners, right? The easy trades, guys, or the ones that are a little bit more trend directional, are the biggest losers and the biggest winners, right? You're looking at Sterling, which is the biggest winner today, and Kiwi's been the biggest winner of the week. So it throws a jam in this, right? You're kind of gauging that. Shotgun approach, I do think you get a little bit of a rebound here, but I do think that rebound still would be at risk well below 96. Just my humble opinion, Marchin. I want to see reaction at 93 if you get it. All right, just a quick shotgun approach on that one. The other one you wanted to look at as well was Swiss yen. Still holding resistance. Nothing's changed on that one. Grind, grind, grind. I know these are levels I mapped out for you because I never, ever, ever, ever look at this. Nothing for me here. Are you kidding me, Marchin? I mean, dollar yen is ugly enough. You're going to throw a Swissy on that one too? No, there's nothing for me here. Yes, there's ongoing divergence. It's uptrend resistance. The risk, in my humble opinion, would be for failure, at least on the long side, while below this zone. Is there anything here to justify trying to fade this yet? Not in my book. Okay. I'm playing with you, March, and you're not annoying. I'm always down to look for opportunities, but I don't want to try segue and force a trade where the merits are just not there. And I feel like if we scatter our net too wide, right, that's the risk that retail falls into all the time, all the time. Okay, last but not least, what is the last one you want to check out? Euro Kiwi. Now, okay, now that's where now that's worth taking a look at, Marcin. Euro Key. I wonder what that looks like. Huh. Here we go. All right. So on whole, the one thing you look at a trade like this that might turn you off is that, Mike, here's the monthly open, here's the monthly range. You know, it's a 3%, 2.5% range. We're right slap in the middle, actually towards the lower ends of it. Here's the monthly open. So you're actually close to putting in like a monthly doji on this one. Not necessarily a good thing, but where we turned downtrend resistance, well, that's pretty attractive. If this was a monthly opening range break to the upside and now we just broke back below, that's a monthly opening range reversal trade. That's bearish. Support. This is also the median line. This is a modified pitchfork off that's that secondary high that we made last year. Boom, boom, boom. Resistance, median line resistance, little peekaboo there. Resistance, little peak there, resistance, push right back. Looks pretty clean. All right, let's drill. Let's get the 240 here. Let's see what's going on. Could be a 1, 2, 3. You look for a 4, and then another final 5 for a new low from a wave count, just like staring at, it's kind of jumping out at me right now. So I'd be looking for inflection here near term, to be honest. The momentum looks like it's waning. The 4 hours showing divergence, the 2 hours showing the divergence, the 1 hour showing divergence. So the divergence is settling right into that slope. So near term, yeah, you could see a little bit of a recovery rally. I'd be looking for failure in that recovery with a buckle below 66.80 to get the thing going. So kind of like, and again, we're getting real granular here, but looking to put some color to the slope. Nope. Yeah, there's nothing necessarily to add to the downslope yet. So for me, I'd be on lookout for recovery, kind of like a 38.2 or a 618, both levels of interest. If it recovers, for possible failure for the break lower. But that's just based on the sort of consolidation crunch that you're getting here. But definitely an interesting setup. Right now, though, heading into the US trade session, I'd be looking for a buckle right here. If 66.80 gives out, I think there's room to the downside on this one. All right. And sterling yen says, Marcin, one more here. So this was euro kiwi. And euro. And what'd you want? Sterling yen. PJPY. Sterling yen. High day close, 55.50, just higher. Confluence zone with the upper parallel. That's actually an interesting trade too. But this one's one where you don't chase. If you're holding longs, you're paying close attention here. It's the high day close that we made for 2018. Now the actual 2018 stretch high is another level that you want to keep in mind on these runners, and that's near 56.60. But it's one of those trades where if you're not already long, there's nothing to do here. Do not try to get cute and short this at this point just yet. I think it actually will be a beautiful exhaustive trade for a near-term scalp at some point. But this is a break of the objective weekly opening range. It's a break of this near-term consolidation, lower highs, higher lows. And I do think you get the extension towards 55.50, 50, if not 56.60 over the next few days before you finally make some sort of larger turn. Okay, keep an eye on that. All right, you got your full money's worth this week, guys, or today. So I'll go ahead and wrap it up here. I want to wish everyone an awesome holiday weekend. If you guys are in the States or you're taking that extended break, have a blessed weekend with the fams and the loved ones. Enjoy the time off. Interesting setups into tomorrow. If you are going to be on the markets tomorrow, guys, really stay nimble and pay attention to that read. Oh, 2.9% clip in and of itself for core PC isn't earth shattering. But on the back of the CPI numbers we got last week, that blowout 4% read, and on the amidst all the talk that we're getting from Fed members that maybe we do need to start talk about tapering, maybe we do need to start thinking about, you know, the possibility of runaway inflation, or at least a more lasting, persistent inflationary picture. Tomorrow's read will be pretty big. So again, 2.9 is the expectation, 1.8 is the previous read. We're trading off the deviation of that print. All right, so stay nimble into the close of the month. Have an awesome weekend. Jay, Marcin, Eman, Steve, Aurelian, everyone in the room, have an awesome weekend. I'll see you guys on, there's no public webinar on Monday, so like you see, you're right here back on Tuesday and Thursday next week. Have an awesome weekend. Cheers.